Managing Director at Pidilite Industries. He's joining us to talk to us about the numbers from Pidilite this time around. Because the revenue growth, Mr. Puri, was primarily driven by volumes this time. Could you break it down in terms of value versus volume for us? And going forward, what's the outlook for the entire year, given the kind of urban versus rural demand trends that we are witnessing?
Sure. See, overall, if you look at the quarter, we've had a good quarter. Specifically, domestic growth has been good and robust. Domestic values are up 11%. Domestic underlying volume growth is up 12%. At an overall organization level, the only issues of concern really are international. Wherever we have exports, for example, some of our neighboring countries, be it Nepal, currently be it Sri Lanka or Bangladesh, economic conditions there are a little strained. Also, exports to the developed markets, specifically US and Europe, are clearly under strain. There are sluggish demand conditions there. But overall, if you look at our performance, given that we are predominantly a domestic company, our performance has been good. We've grown broad-based across categories and geographies. Both urban and rural growths are in volume growths in double digits. And I think the encouraging thing for us is we're seeing rural slowly return. In fact, rural growths are about 1.5 times urban growths, which is really a source of encouragement to us. Now, going forward, really, I would say the signs are good for 3 reasons. A, while the monsoon's distribution has not been good, it's like, been intense spells, but overall, it does appear that this will be a pretty normal monsoon. For us, in our sector, we are seeing a fair amount of tailwind with good construction activity and therefore good both renovation and new construction demand. And of course, specific to us, we're also back to stable input prices. And you would have seen our margins are now back in the normal stated range. We've always guided for standalone margins to be in the 20 to 24% EBIT range, and we are now at close to 23. So overall, therefore, given all these factors, while yes, I think international markets may take a little more time to stabilize or for demand to come back, I think we're looking at the future with increased optimism.
As you said, B2B businesses, 18% of revenue faced headwinds due to lower exports and also lower demand from businesses dependent on exports. By when do you actually see international operations recovering?
I think it will take a little bit of time. We are hopeful that by the end of this calendar year, we will start seeing better demand conditions I think the US will recover faster. Europe may take a little more time. And therefore, we believe that this is not something that is going to turn around quickly, but there are some encouraging signs, but we would really wait and watch. And I think it is a 6-month phenomena at least.
Okay, wait and watch. US might recover faster, but it's best to let it play its course. But, what about the C2B segment, How's the entire consumer-facing business doing?
See, clearly we are seeing a continuation of the trend that we saw post-COVID. Consumers are today far more conscious and wanting to invest far more in their homes. And this obviously benefits home improvement companies like us. We're seeing both from a home renovation as well as a home upgradation and therefore new construction. Fair amount of activity after long. The real estate sector is seeing buoyancy. All of this is obviously contributing for us looking at the future with increased optimism.
Your margins have also seen quite an improvement this quarter, mainly owing to moderation in input prices. What is the sustainable level of margin you're looking at?
We've always guided that as far as margins is concerned, we are very comfortable with the range of between 20 to 24% EBITDA. And you would see we're already at 23. I think we will now remain in that range, at least for this calendar year. And, barring any black swan events, it appears that input prices are fairly stable.
Okay, point taken. But you talked about your margins and how the overall outlook is in terms of demand. But what could be those black swan events or challenges that might go against your guidance or your own expectation?
see, right now we live in a world where suddenly we are also impacted by geopolitical events. So my guess is as good as yours. But in the past we've seen COVID, we've seen the Russia-Ukraine situation, and its concomitant impact on input prices as well as inflation. We're just keeping our fingers crossed that now we see a lot more stability in the geopolitical situation.
Mr. Puri, how are you analyzing competition from paint companies in waterproofing? Any plans to go much more aggressive in deco paints, considering you launched a host of new products recently in that category?
See, as far as competition is concerned, specifically from paint companies in waterproofing, paint companies have been in waterproofing for a long period of time. It's not that they are new to waterproofing. We are clearly the leader in waterproofing as far as consumers are concerned. When they're asked to name a waterproofing brand, Dr. Fixit is top of mind. When you look at our growths, you will see our growths continue to be healthy. And we've always said that because waterproofing in India is such an underdeveloped category, a certain degree of competition is actually welcome because it helps expand the market faster. As far as our paints is concerned, we've always said that, listen, on paints, we're looking at it in our smaller towns as a range completion exercise so that our dealers get a full range. It's very early days to say how is it doing. I'd wait a quarter or two before giving you any firm indications.
Okay, Mr. Puri, on that note, we'll let you go. Appreciate you joining us on the show and talking to us about the outlook as well. But let's do one thing. Let's take a very small break on the show. But as we do that,